Alright guys, in today's training I will be teaching top-down analysis, and top-down analysis involve examining the forex market from various time frame, including monthly, daily, and you knowing the overall trend of the market. Hope you understand. So if you can follow this training from the from day one to this moment, you should be able to analyze. At least you should be able to know your time frame, know where you can enter your market. We are checking our time frame from the lowest time. We'll actually start from the higher time frame to the lowest time frame. So before we can execute our trade, so that we can know our entry and our exit. Our entry is where we execute the trade, where we enter the trade, and our exit is where we actually come out of the trade. It's either you take the profit or you take your stop loss. So your take profit is TP. That means that you are instructing your broker that when this market gets to this extent, when you make profit to this extent, that the broker should close your profit. And the stop loss means that you are instructing your broker that if actually this you lose this amount of money, and wherever you place your stop loss, that means that the trade will close in that point. Hope you understand. So what we are doing now is top-down analysis. We are going to our monthly time frame, which is the highest time frame in this Meta 5 view. Hope you understand. So now this is our monthly time frame. What are we checking this monthly time frame? We are checking the overall trend of the market, and we are checking the second to the last candle. Now this is the second to the last candle. The candle is actually bullish candle, and the candle is not a pattern, it's not a candlestick pattern, it's just a candle. If you have this course with you, you understand what I mean by that. So what we are checking is overall trend and the last second to the last candle. So we can see that the candle ends with bullish. Now we can now move to our week, and hope you don't you actually don't forget that in monthly time frame, one candle is formed for 1 month. One candle is formed for 1 month, and this weekly time frame, this means that this only one candle is formed for a week. Hope you understand. So when this week ends, another candle will start forming, and the previous one will actually close. So that's that about that. And now this market is in uptrend, is on trend. So, and we are not trading in this higher time frame. We are not executing our trading in this higher time frame because we don't have the money that it takes to move the market. We are not the one that is moving the market. We are just participating. Okay, let me give you an example. Assuming you want to carry a container now, and you see people that they are capable of carrying the container, but you don't even have the energy to carry the container. So what you have to do is to do what? Is to leverage on those people. You just join them after they have already carried it, after they have lifted it, because you don't have the capacity to lift the container from the floor. Now that's how it is. We are not the one moving the market, but there are billions boys. We call them billions boys, big boys that are the one that they trade with billions, and they are the one that they are actually controlling the market. So what we are doing is that we are participating. We are just following what they have already done. So how can we get that? That is why we have to go to higher time frame to know what is wrong in the market, what the market is doing, what is the overall trend. Hope you understand. The overall trend of this market is what? Is uptrend. We can see the characteristics. We have the characteristics of uptrend market, downtrend market, we have ranging market, and we have shopping market. That is the four types of market that we have. Hope you understand. So we have uptrend, downtrend, ranging market, and shopping market. So the characteristics of uptrend market is higher high, higher low. Hope you understand. And the downtrend is lower low, lower high, and we have ranging market, which is equal high, equal low, and we have shopping market. This kind of market you cannot analyze it. Hope you understand. So now this is our weekly time frame. Now what we are checking here is to check maybe the market is changing the structure, and we can see that we are still having the characteristic of uptrend market. Now we have let me just take my so here we have higher high, one higher high here and higher low. We have higher high, we have higher low, because this higher low is actually higher than this low. Hope you understand. But in this aspect, they actually in equal low, but this one is higher a little bit than this, and we have a high that is higher than this previous high. Hope you understand. We have this high and it's higher than this previous high, and it actually come down and give us another low here and give us another high, whereby it's giving us uptrend. Hope you understand. Now we are not executing our trade here. We have to go to the daily time frame. So we actually want to see what the market is doing here. So the market is actually going up here, but the market is coming down because we have a double top. We have a double top at we have double top here. We have double top here. So this is first top and second top. So there's a resistance in that place that actually pull this market back down. So you now in the market, if you actually trade in weekly and there's a pullback, you actually have a problem, because actually maybe you have $100, $200 account, and this move back now will actually affect your money. So this little pullback will have finished your $100, $200. So that's why you have to we are not executing trade in even day one. So we have swing trader and scalper. Now if you are a swing trader, that means that you want to leave your market, your open position for days or for hours. So now you can now be entering your market in H4, which is 4 hours. But for scalper, you have to go to the very low time frame, which is 5 minutes, 30 minutes. Hope you understand. Those ones are effective for you, so that your stop loss and your take profit will be in a safer place. Okay, now we have double top here. Now there is probability because of this, and this is a chart pattern. Where we get to that place, we have candlestick pattern, we have chart pattern. So if actually you can get it, because it will really help you. So now we have top 1, we have top 2. So when we have this kind of chart pattern, we know that this market will actually will sell. So now let's move to our H4, which is our 4 hours time frame. Now we have our 4 hours time frame here. Now this is a resistance here, and when this market actually get to this point or this resistance, the market actually went down back to retest this line. And when this market tests this trend line, it's actually moving up again. So whereby there's probability that this market give us another high that is higher than the previous high. So, and have this at the back of your mind that forex trading is a game of probability, and is very different from gambling. Hope you understand. When you are gambling, it's something that you don't know. But now in the situation of forex trading, you can backtest and see what the market has done previously. Hope you understand. So what we are doing now, we are backtesting to the lower time frame to know what the market has done previously, so that we can know where the market can probably end to. Now we are going to H1. This is our H1 now. You see that the move of the market and the candles, the chart pattern will be different from the higher time frames. Now we are going solo to the lower time frame. So let's wait for it to load. Okay, now we have, let me draw the trend line here. Let me draw our trend line. So take the trend line. Okay, now we have this higher. This one is giving us uptrend. So we get to that resistance. The resistance actually put the market down, and the market retests this line and is going back up. Now we can't actually enter this market here. Now we have a very pain bar candlestick pattern here, which give us assurance that the market will buy, and the market is what? The market is buying. Actually, the two followed confirmation candle is red, but we cannot enter as we see that two red. But now we are not even executing our trade in H1 because we don't have the kind of the money, we don't have billions, we don't have $1,000. So we just have to go down to 30 minutes. Now we are still having the same thing in 30 minutes. The market is what? The market is going back to uptrend. The market is going to uptrend. So now if you want to follow this market, you have to be very careful. You have to know where your exit is. You must know where the next resistance is. Resistance is where the market can actually come back, and you must know your support. Now, the difference between resistance and support is that the resistance is where the market can be rejected at the top of the present price of the market now, and the support is below the price action now, the present price now. So now let me just draw out support and resistance so that you can see that now. Okay, now there is a rejection in this area whereby this market actually follow. This actual market went actually come back here and retest this support before it actually moves. So now where is our next resistance? I will actually take my next resistance here. And next resistance here, because there is rejections here. There are rejections here, so there's probability that the market get to this area and start coming back before it break out that place. So we must be careful in that area because it's a rejection area and there's a strong resistance in that area. So now you can, for those that did not have, maybe you have $20, you can just move to 5 minutes time frame and check your entry and check your exit. Now in the next video I'll be showing you how you can enter a trade, how you can exit a trade, how we can close a trade, how we can open positions. Now I'm just trying to tell you so can you see a lot of candle in 5 minutes now? If you are able to take this market from this down to this place now, you are in profit. Now we have 1 minute time frame. This 1 minute is not advisable for you to be trading this, enter your trade in this 1 minute, because the candle, they are not that very strong. The candle pattern, they are not very strong. You can see that they are very tiny now. So you can start from M5, which is your 5 minute time frame, down to 15 minutes and 30 minutes. So thanks so much for attending this class. So the next class I will be teaching you how you can